Welcome to our daily Forex market analysis call, and this is in preparation for trading on October 11th, 2018. Just a quick disclaimer before we get started. This is for educational purposes only. Trading is a risky business, so please be careful with your money. So we'll start off as usual with our Forex Factory calendar here. In terms of the news, we had numbers out of UK here. We had negative numbers come out, and as a result of that, we did see that British pound dropped a bit before it went up, and US numbers came in line with expectations, so nothing really changed there. And then that's it. So coming up tomorrow, we have Bank of England, Governor Carney speaking, so that will be important. He's speaking a couple of times, so we just have to pay attention to the comments that come out of it. Important thing here, even though this is marked in orange, this is actually quite important. ECB monetary policy meeting account. So this is like FOMC or Fed meeting minutes. So important, even though we're not really expecting there's no rate change or anything else, but it just gives a direction as to if something has changed from ECB, it will show up in the meeting minutes. So it'll provide direction in terms of how ECB is thinking for their monetary policy. So this is important. And then we have CPI and core CPI. Again, very important numbers here because inflation is one of the things that the central banks will measure and they keep an eye on. They want the inflation to increase steadily, however, not too much. So one of the concerns with the US has been that the inflation has not been rising. We saw UK, we saw a big increase in inflation, not big, but good increase in inflation. We had a 3%. Inflation is at 3%. So with the US, we haven't been seeing that. So that is a bit of a concern. So if the numbers come out negative, that will have a negative impact on the US dollar. And if they come out better than expected here, that will be positive for the US dollar. We do have a Treasury currency report. Again, do not know when that's coming out. And that's it in terms of the news. So let's move on to the charts here. We'll start off with Euro US dollar. We were looking for Euro dollar to go up, and it has done that. But as we can see, it's still trading in that range. It hasn't really broken out of the range. So for tomorrow, first thing would be to look for a range-bound trade. So when price is trading in a range, what we're looking for is to sell the high and buy the lows. So in this case, the primary scenario that I'd be looking at would be price goes into the high of the range at 1.1550 and then bounces off of that, or it comes into the bottom and then bounces off of that back into the range. So that will be the primary scenario. However, we did have a bullish candle close here, but again, we did have a bullish candle close here as well, and then price had turned, and that's why the base case scenario is a range-bound market. So bias is neutral, and we can see the volume is neutral as well. Same thing here. We saw that even though we had a bullish candle close, but the volume was neutral, so price turned. We have similar thing here, bullish candle close, neutral volume, and we have, so we could see price turn around. So that's important to keep in mind. So that's the base case scenario now, because we do have a bullish candle close, price could go up higher. So if price breaks out of this range, next target would be 1.1593, so about 1.1600, or even higher into 1620 level. So again, my base case scenario right now is bias is sideways, and I'm looking for a range-bound market. However, if it were to break out to the upside, 1600 or 1.1620 would be the target to the upside. British pound here, yesterday we were looking for a bullish move. We got that. Now, the interesting thing here was that when we got the bearish numbers, or negative numbers for GDP, we saw this drop, and then price came into the support here and then turned around. So as a result of that, we got a bullish candle close. So price stayed high. We have a bullish candle close. We are into this target that we had mapped out yesterday. So right now, bias is bullish, looking for price to go up higher. However, as we can see here, price had turned at this point. So we do have to be careful with this one. However, right now, the scenario is slightly different. We're not coming off of a drop and a pullback. Right now, we are moving higher. So the bias is to the upside. Volume is green. So overall bias is bullish here for the British pound. And target would be 1.3300, which is the top of the pin here. So our move looks more like this than this one here. So bias is bullish and target would be a 1.3300. Aussie dollar, the commodity currencies were interesting today. Yesterday we had talked about them going into two different levels. One was a pullback into 0.7130 level and or a deeper pullback into the next support and resistance level. Didn't quite get to that, just got stuck at the first pullback level. And then we have had a bearish candle close. So as we can see, we saw euro and British pound go up, whereas Aussie dollar went up initially and then turned around. And we'll talk about oil in just a little bit, and we'll talk about dollar CAD. But as we can see here, bias is to the downside. We have a bearish engulfing candle close. So it did go up, but the commodity currencies were weak. And as a result, we saw a drop here. So this gives us a bearish bias here. And the next move that we are looking for is to the downside here as well. So we are looking at, we just need to go out a bit here. So the next move that we are looking at would be 0.6970 level to the downside, which is this pin. So right now we are into this really into the support levels here. We have had this bearish basically trend from November of last year, and it's still intact. So we're looking for price to drop further. Bias is bearish. I will look for a pullback into this 0.7080 level, and then a further drop. 0.6980 will be the target to the downside. So bearish bias here. Looking at our 1 hour chart, we can see price went up initially, went into that resistance level, and then dropped from there. So bearish bias for Aussie dollar. New Zealand dollar, this one has been interesting as well. We looked for pullback or looked at pullback levels yesterday. So we had a bullish candle close. So we were looking for price to move up, and it did. So it went into this previous support resistance level and then turned from there, did not get to the second level, just turned around from the first one. So this looks bearish, looks like a bearish pin bar here. So bias is to the downside. Now, again, with the New Zealand dollar here, the move has been very, very small. Very, very small candle here, not a large move, but we do have a bearish candle close. And as a result, looking for price to move lower, in this case, looking at 0.6350 level. So if we were to zoom out again, we are into these really the support levels that we haven't been in quite some time, but the bias does stay to the downside. As we can see, overall bias from the longer term perspective is to the downside. So bias is bearish, and target would be 0.6350 level, which is this pin right there. So bias is bearish for New Zealand US dollar. Dollar CAD here, in my opinion, was the biggest upset. We had a really nice trade setup here, tweezer top trade setup. However, it did not work out. So this is one example where things don't go according to plan. And the reason for that was because oil really tanked, and Canadian dollar is directly related to oil. So I'm going to pull up the oil right here. As we can see, big drop in oil here. And initially, had looked at yesterday, had talked about how price could go and test the high here. And I was concerned about the pin on the top here for oil. And as we can see, it went almost into the high and then turned around and had a huge drop. We had a huge drop in oil. And as a result of that, even though most currencies, or at least euro and dollar, went up against the US dollar, we also saw New Zealand and Australian dollar pull back higher. But for dollar CAD, it did not do that. It just, we had a huge move in the opposite direction of where we were expecting it to go. And the reason for that was this big drop in oil. So in terms of the oil, this looks bearish here. So we're looking for price to drop further. I will look for a pullback and then a drop further here. Target would be 71.08 for oil. So this is looking bearish. So let's go to our dollar CAD and we'll take a look at what that's showing us. Here we go, dollar CAD. As we can see, it replicated the exact opposite move of what we saw in oil. So right now we have a huge bullish candle close here. So this pattern didn't quite work out because oil dropped, and as a result, we had a bullish candle close. So this is bullish. Bias would be to the upside, and the target here would be 1.3100. So bullish bias and looking for price to move up higher for dollar CAD. So commodity currencies are weak and risk currencies are strong against the US dollar. So we don't have a perfect alignment in the market. So tomorrow we have to be mindful of that we do not see the perfect alignment. As a result, something may shift. So either commodity currencies may shift to align with the risk currencies and everything goes up against the US dollar, or the other way around, we see a drop in euro and pound and they turn around to align to the commodity currencies against the US dollar. So be careful of that and keep that in mind as you're trading tomorrow. But right now, dollar CAD is looking bullish. Euro pound here yesterday, we had talked about a drop because we had a bearish candle close, came right into our target. So this is looking bearish. It looks like a bearish pin bar. So looking for price to drop further here. We are into support, so we do need to see a break of the support to the downside. But overall, bias is bearish, and 0.8680 will be the target to the downside for euro pound. Euro Swiss franc here, this one was interesting.